Welcome back, and joining us for a look at what moved investors' money today is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. I remember yesterday there was a lot of commentary on the markets, and particularly the US markets being calm after that inflation print for February came out. But now you're kind of seeing a different picture where those markets are maybe coming off a little bit, and I'm wondering if they're taking a breather. But also even on the JSE front, we saw trading in the red for most of the day until it made a turnaround of over 1%. What would you make of that?
Yeah, and you are right. That calmness is unusual, especially on a day when you get the CPI data. And I think this breakaway started since we've seen the US starting to increase interest rates. And yes, markets, I think they're saying, listen, as much as the inflation data was worse than expected a little bit, we still expected June that we'll have the first rate cut. And we can also see that spill into the likes of your gold as well, So markets are firmly believing that come what may, June will still happen. And remember, this is the last economic data that we're getting before the guys are making their interest rate decision next week. So markets have had all this whole thing factored in, and bearing in mind that the last print that we had in January, which was worse than expected, that one rattled the markets. But this time around, it was more of calmness. Maybe it's maturity, who knows?
Yeah, it's really interesting how markets behave, and just how they also respond to kind of the same data that does come out. Let's take a look at what is the company news that came out of the JSE today, starting off with the interim results that came out of Growth Point. So we did have total revenue increasing there by 4%, but a slump in a distributable income per share of 8.6%. It does seem that the interim performance was better than expected, of course, though for the full year still expecting a decrease there. Just talking about, the interim period being better than expected, can we maybe breathe some sort of sigh of relief at this point, or would it be too soon?
I think it's too soon, because look also into their profits, as headline earnings per share. I think they're down 38% or so. But you look into their vacancies, the South African ones improved from 9.7% to 9.4%, which I think it was a good thing. And also the group generally improved from, I think, 9.4, if I'm not mistaken, to 8.5. And also the guys managed to raise, I think, almost 340 million for that student accommodation, an indication that that asset class continue to be a niche one and still very attractive. Yes, their loan to value was not too good because it increased from 40% to 42%. But now you look into that whole thing when it comes to the issue of the interest or the finance cost. They increased by almost 17%. And we know that's due to high interest rate, especially on those borrowings that were not hedged. I think the guys so far hedged around 76% of their borrowings, which is not a bad thing. So yeah, I think you can be forgiven to think that maybe the second half will be much better, and also having the likes of VNA, doing well, benefiting from tourism. And we've seen when it comes to our Q4 GDP numbers that we had a less load shedding. And if that continues, probably we'll continue to have more footfall when it comes to their malls.
All right. Let's go into IT. EOH, they're coming out with an interim trading statement. The company is still reporting a headline loss, even though it did narrow from the previous comparable period. That share price, though, interestingly, did tumble by more than 4%. What did the markets hold on to there?
They were not impressed. We know that it's been a very challenging environment. We know that the last 3 months were not that bad, as they've seen an increasing activity, especially when it comes to tendering. But their revenue been down 4%. Their gross profit margin down a whopping 28%. And I think that's going to be an issue. And them, as much as we agree with them that it's very difficult to keep skilled IT workers, but I think they're keeping them at a very high cost. So I think that is putting a damper when it comes to their costs.
All right. Before we get to your stock pick, let's talk about the Foschini Group inking a deal with sportswear retailer JD Sports. So they've partnered up so that the Foschini Group will be the exclusive partner to JD Sports. I actually saw the share price and I thought that the markets would react, but no reaction there. And I'm wondering if we should take something from that market reaction, or maybe just let this one pass.
You know, let that one pass, I guess. It's a good move, but I think maybe it might be too late because if you look into this UK company, I mean, they have the Nikes or Adidas, stuff like that. But back home here, we have standalone shops when it comes to those brands. So it's not like really having this upper hand when it comes to those brands. And yeah, Total Sport not doing that great. So I think for them to try to make sure that they grow that part of the market, not a bad idea, but it might be too late.
All right. Well, let's get into your stock pick for today, something that you don't think it's too late for.
You know, I think I'll go long the Chinese market and I'll buy the Citrix, the CHN, you know. But I think the Chinese market, they've got some serious good valuations for the fact that they've just been down. And we know that we've got issues when it comes to the property market, which accounts for almost 80% of that economy. But you look into that index, it's mainly tech stocks. And we know the guys were harsh at some point when it comes to tech stocks. I'm saying the Chinese government cannot afford to have issues with the property market and then start impeaching pain on themselves by being harsh again when it comes to the IT market. I expect some rebound from that end.
All right. Well, thank you so much for your insights and for your analysis today, Makwe. That was Makwe Masilela from Makwe Fund Managers.